And then I will grab, let me just change the settings on here to disable waiting room. Right. There, so I am live in the group, so I now need to grab this timestamp, don't I? So I can drop it everywhere. Just now. Copy. Paste. And let's drop that in the Ninja group. Copy. Back over here. Ninja. As I said, if you're watching this on replay, you might want to just fast forward the first few minutes just while I get set up, guys. Okay, so I can get rid of that bit. Oops. Post that in the Ninja group. And then I can post that also in my Making Sense group. So then we've got all these groups to share with everybody. Oh, I've got to do it in the Freedom group as well, haven't I? So I'm not going to let people jump on the Zoom from that group, so I'll remove that one. Post it in there. And then I need to pick this up again and post it in the free group. Copy. Free trial members. Let's drop that in there. Paste. Did it populate? Yo, what's up, Paul?
Hello.
Hello. Right, just doing the boring bit.
As you do.
Put these in.
I thought my phone had broke, you know. I actually, I recently did a bit of a touch-up, shall we say, a root touch-up.
All right.
And it went a bit darker than expected. And my phone won't recognise me on the, you know, the face recognition thing. To
no face or hair recognition now. That's so funny. Is that why you're not on camera?
No. Thankfully,
yeah,
actually,
we all know why now. Paul dyes his hair, everybody. Announcement.
I thought it was that.
That's the secret to his youth. There you go. That's all right. That's all right.
I should turn it off and on, and it worked again. So
well, there you go.
Yeah, I would have been distraught.
Hello, Stanley and Christine.
Hello.
Hi. How are you?
Good. Are you all right today?
Yeah. Yes.
Good. Excellent. Right now, I think I'm where I need to be everywhere around on Facebook. So that's all good. Good. Let me make sure I'm muted so I'm not going to get feedback on anything. Yes. Yeah. Hello, John. Right. It's just gone 3, so that's not bad going. I got there for 3 o'clock today.
Headphones on.
Now, I've duct taped the children to in front of the television, so we shouldn't be disturbed. So hopefully the duct tape will hold long enough for me to get some training done today. If not, then I will have to get stronger stuff. Maybe super glue next time. So we'll see.
Yeah. No nails. That's good.
Yeah, no nail stuff. Yeah, that'll work. You can stick them to the ceiling that way, can't you? That works really well.
Yeah, just you know the little plastic chairs that you don't mind if they get thrown away. Just stick a blob on top of that and go and sit down, kids. Go and sit down.
Also, what I like to do is pick them up by their clothes and hang them off of the back of the door hooks, and they just sort of hang on the door. They stay there for quite a while, which is good. They find that's quite funny.
And free parenting tips
that
as
one
well.
off.
Excellent.
Mine were younger.
Excellent. Right, okay, I'm going to get straight to it because today we are going through the BYOB strategy, which is our sort of newbie strategy that we like to introduce to people that are just joined, because it's a strategy that has got very, very simple things to look out for. And you can literally come in with hardly any experience at all and kind of just look at these 3 indicators and decide whether you want to trade or not, which is really, really good. We like things that are simple and easy to do. So I'm going to share screen, make sure I'm sharing the right one. Share. And we're going to look at this BYOB strategy together. So are you seeing the vibrator tool on your screen?
Yep, we are.
Excellent. I've shared the right screen. That's brilliant. Right. Now, I've gone on to vibrator. Normally I trade off the web analyzer, which is the old version, but I thought I'd be a kind of all modern and hip and trendy today and go for the new one. So, but it makes my eyes, because it's white and I normally trade off a black chart, it makes me a little bit, I need my sunglasses on, it's a bit bright for me. And I don't know how to change the settings on that to get the colour back to black. So I haven't figured that out yet. Keith's here, Trouble's here. Hello.
Hey up.
Hey up.
Hey up.
Hey up, love. Right, okay. So vibrator. This is the tool we're going to be looking for our trade signals on, and this is within your IM Academy. If you haven't got the vibrator tool, we highly recommend that you add it onto your platinum packages. I think it's an extra $15 a month or something, but it's really worth it. It sends out loads of signals all day long for you to go and have a look at, and it's a really, really good bit of kit. And as you can see, the signals come in down the side here, and you can select the time frame for those signals. For the BYOB, we are literally, I'm going to be looking at the 15-minute and the 5-minute for these purposes, so I've just ticked those. Right, now, the first thing we need to do is we need to grab our watch list. This is my old one. There's 2 versions of it, but I've just got the old one for now because it's much simpler than the new one, and I like to keep things very simple in this group. So before we even start to trade, we need to go and look at the news for the day, because the news does affect the Forex markets in a big way. Okay, so we use a site, and we recommend a site called forexfactory.com. You can find that on Google. It's very easy to find. And this Forex Factory gives you the news for the Forex markets for that day. Now, when you log on, just go to the timestamp up the top there, and make sure that you've got yours set to your time, so that the news that's coming in is the news for your country, and it's all time stamped. Okay, and then you go to calendar. So today is Thursday the 30th of April. Now, normally within Forex, when you get to the end of a month, it is normally it can be quite volatile or even quite slow at times. The markets are not moving the way that they normally move, because everything's kind of closing up for the end of the month. Lots of the banks are doing their end of the month monies and moving stuff around, and so it can either be very slow and everyone's kind of just waiting for those figures to come in, or it can kind of, it can be a little bit choppy. So if we go down to Thursday the 30th, there is a lot of news today. Look, it goes all the way down here. There is a lot going on today. So I think we're just not going to bother today, and I think we're all going to go down the pub and we're going to go and see that else. So let's just not worry about that. We're going to get the joke book out. We're not going to bother trading today because there's no point. No, honestly, we can find something, I'm sure. Right. So what this does is it gives you these little coloured flags next to the currency pair. Now, you'll start to get used to these currency pairs. JPY is the Japanese yen, New Zealand dollar there, NZD, euro. Now, anything that's got a yellow flag against it is low impact news, which means it shouldn't have much of an impact on the trade for that day. If you've got an orange flag, it can be medium impact news. So that could be a medium volatility for that particular pair. And what it does, it gives you the time that you need to look out for that pair. So there's going to be some sort of announcement or something published around that time that could cause the markets to spike a little bit. Now, when you get a red flag news, the red flag means high volatility, which means it could cause the market, the candles, to jump a little bit faster or a little bit harder than you're expecting them to do. So let's see where we are now. We're at 3 o'clock in the afternoon on the UK time. So look, at 3 o'clock, USD red flag. Now, USD, the US dollar, that currency pair does kind of have an effect on most of the other currency pairs. So even though it's just USD is red flagged, it can affect the other currencies as well. So we need to be very aware that there has just been some USD news announced. So that could have caused any volatility in the markets with the US dollar. And we've got a yellow flag at 3:30. So hopefully we had 245 orange flag USD. So there's quite a lot of USD stuff going on at the moment. So we need to be aware of that. But then that seems to be it for the day. So it's just really USD this afternoon. Most of the stuff should have been over and done with. Now this euro, look at how many euro stuff there is. Even though this is yellow and orange flags for the euro, look how many there are. Now, when there is that many throughout the day, you've got to be very wary of euro, because all this can have massive effects on everything because there's so many things being announced, okay? So please just be aware of the euro today. It seems that most of the euro news has been announced by 12:45, but you know, we're not that far away from that. So just be careful of the euro as well. And Canadian dollar red flag ran at 1:30. So really, the USD and the euro, we need to be a little bit careful of those pairs today. Now, always check your news before you're about to trade. When you wake up in the morning, you think, right, what's the day going to hold for me today? Find out what the news is doing and just make a note of it somewhere so you've got it in front of you so you don't forget. Okay, and that way you don't have to keep going and checking. And also, once the news has passed, it gives you the actual figures so it can tell you whether, you know, price has gone up or down and things like that. So this is a really good little site to add to your bookmarks on your sites. Right. So the first thing on our BYOB trade checklist is check the news. So we've checked our news, so we know what's going on in the world, okay? And also, apart from Forex Factory, just kind of be a little bit aware of current affairs and things that are going on as well, because with everything that's going on with COVID-19 at the moment, I know Boris Johnson, there's normally a press conference around 3 o'clock in this country. Is it 3? No, it's about 5 or something like that. There's a press conference that goes on every day in the UK where Boris and his health secretary speak, and that kind of tends to affect the news as well, whatever they're going to announce. So have a little look at the normal news as well and see what's going on.
4:30.
Is it? Yeah, thank you. I knew it was around that sort of time. So yeah, just be aware of that, because there has been times when there's nothing been actually advertised on Forex Factory, but then Boris will announce something or some figures will come out and it will make things sort of drop or spike with the Great British Pound as well. So the next thing we need to do is we need to go and find a trade. Okay, so I'm going to use Vibrator today. Now this is the Vibrator tool, and I have got this set to the BYOB cash out strategy. So you highlight that at the top, and then what it does is it puts your BYOB, what it does is it kicks you off, right? So let's just go back in again, shall we? Let's have a little look. Oh, please don't do this to me. Come on. Wakey, wakey, Vibrator. Oh, God. It's just going to spin now, isn't it? I've got the spinning wheel of death, look. Let's try again. Why is it not remembering me? Is it going to remember that one? No? It's because I'm trying to use the new one. It doesn't like me, look. Oh,
You wrecked it.
I reckon. Let's try. You should remember my password. It's been very, oh, God. When in doubt, get your password book out. That's what I'll say. Now I'm down myself. There's my password. What are you talking about? Right, let's try again. I had it all set up nice and ready for you. Look. I'll tell you what, we're going to shut that down. I'm going to shut that down. And I'm going to start again. Let's just go back through, because it doesn't want to let me in. It's been a bit glitchy. Yay, I'm in. Right, there's always a way.
Got the B.
We're back on. There we go. Right, taking those off. Right. Okay. So this, as I was saying, is the vibrator tool, a beautiful piece of kit that works every time. We love it here. Right, okay, once you're logged in, what you want to do is down the side here, these signals will come up to go and tell you to go and look at something, okay? So, and as you can see, the time passed since the signal was called is on the bottom here. So this signal for USD JPY was sent out 14 minutes ago. And this was only on a 5-minute candle chart. So there's a good chance that, you know, we could have missed this one, but we're going to have a look at it anyway. Right, so the US dollar JPY. What I do then is I go over to a site called Trading View. Now, Trading View is a free website that you can go into, and it's really, really good site for you to be able to use for free. And it's a good one for you to be able to make your charts very clear and very easy to understand, because it's very user friendly. So I tend to use this because you can set this up any way you like. So you can make things bigger, you can have a really good look. And I just find this a really easy chart to draw on, to move around. It's not glitchy. It's a really lovely site to use. So what I do then is I go to the USD JPY. And then that signal on the vibrator was called on the 5-minute chart. So I'm going to go down to the 5-minute. Now, what that means when I say the 5-minute chart is that every single one of these candles represents 5 minutes of time that has passed since the trade was called, okay? Now, if you've got green candles going up, this is a buy. If you've got red candles coming down, these are a sell. So at the moment, as you can see from this chart, we had the buyers taking this up here. We had a little bit of consolidation where they were deciding what they were going to do, and then the sellers took it back down again. Now we've gone into a little bit more consolidation. Now, the way you can tell if the consolidation is about to start is by looking at the shape of the candles themselves. Now, if the candle has a nice flat bottom and a strong thick body, like a candle itself with a nice wick on the top, that's a nice strong candle. But if your candle has got a small little body like this with wicks either side of it, that's an indecisive candle. That candle doesn't know whether to take the price up for a buy, and it doesn't know whether to take it down for a sell. It's called what we call a doji candle. It's an indecisive candle. So at this point in the market, between these two 5 minutes candles, it wasn't sure whether it wanted to continue up or change direction. It did continue up, but these are the candles that we don't want to trade on. We don't want to trade off of these indecision candles. If you see these big wicks sticking out of candles, please just be careful of those because they're a little bit indecisive. We don't like wicks, okay? So wicky candles is not good. And if you look at this one here, look at this candle here. See this green one? Literally, it was just a massive wick. It didn't close. The body of the candle never really formed. It really doesn't know what to do. So when the sellers took this down here, it kind of just stalled. It just went, oh, I don't know what to do now. What's going on? Do I keep going up? Do I go down? What do I do? And it just was indecisive. It tried to go up, but now it's come back to indecision again. So looking at that on the 5 minute, that's indecision. And that's kind of, we don't like indecision, right? Now, for the BYOB strategy, we want to set these candles to high Kanashi candles. There are different sorts of candles that you can put on your charts to trade with. These are normal candles. And if you click up here where these little candle signs are, you can change it to high Kanashi. Okay, so you've got normal candles, hollow candles, high Kanashi, line candles. So that's a line candle, which is very hard to read off of. So we like the high Kanashi candles. These candles represent the trend in that particular candle, right? Now, if a high Kanashi candle has got a flat top, like this one with no wick sticking out, that's a lovely strong sell candle because it's going to push down. If you imagine you're going to push that candle down, you're not going to get stabbed by a wick. So it's a nice candle to trade. It's a nice one that's going to come down. And the same with the green buy candles. If you've got a flat bottom, okay, you're not going to get spiked by a wick. It's a nice push up candle. It's a nice one to trade. So one of the things we look at when we're trading the BYOB is nice, strong candles, and we want them to be either flat topped for a sell or flat bottomed for a buy. So that's one of the first things we look at, okay? But before we decide whether we're going to trade this or not, we need to put something on this chart called an indicator. Now, you will probably see lots of traders on social media with their chart completely covered in dots, dashes, lines, numbers, all sorts of things. And you must just look at it and go, whoa, what is all that? That's just really confusing to me. So I'm just going to keep it very simple. We're only going to put 2 indicators on this chart, okay, that we're going to look at for this strategy. Now, to place an indicator, you go to your indicators and strategies tab at the top, and you can either search in the public library up here. And what we're going to put on here now is an indicator called the stochastic. Okay, so you can start to type that in there and it will come up. You just want the stochastic. And when you find it, if you put a little star next to it, it will appear in your favorites. So you can go straight to it every time you trade. Okay, if you knew how to do the alphabet. There we go, stochastic, right down there. And I'm just going to drop that on my chart. Okay, just going to move everybody over there. Oh, there we go. Okay, so as you can see, it's dropped this line bar at the bottom here, this big purple zone with these wiggly lines on. This is our stochastic. Okay, now if you go into settings, see this little cog? This will tell you that the settings for this stochastic are 14.3.3. Now that is the default one, so you don't have to touch that at all. You can just drop that on there, and that's what we trade from, 14.3.3. So that's your numbers for that one. And with the style, I like to make these lines nice and thick and clear, so you can really see when they cross and you can really see when they're moving. So if you click on that little bit there, you can make these thicker like this, so you can really see them. So let's make them really super thick. And I like to use red for the sell and the green for the buy to correspond with the candle, so you don't get confused. Right, so let's look at this stochastic tool, shall we? It's really good. Now, the green line on the stochastic represents the buyers. Okay, so when these candles are going up, the buyers are in control and they're taking this trade up. When you've got the red one like this, if the red is under the green's in control, the buyers are in control. Now, when it gets to the top of this purple zone, this means that this trade is overbought because it's up there, which means it's above 80. Now, when it's overbought, the sellers are going to want to take control of this and they're going to want to sell it. They are going to take control of this and bring it down. So as you can see from these lines here, the sellers crossed over the buyers on the stochastic, and what they did was they moved it along the top here, and then the buyers took control again. So this was a little bit, this is what we mean by consolidation. These two are kind of battling it out up here to decide who's going to take control of this trade. And as you can see from the candles, look, they started to wick at the top. We started to get these consolidations. We started to get these wicky candles because this was indecisive up here. Now, what's happened here is the sellers are right up here in the extreme of the stochastic, and the sellers have taken control of this trade. They've crossed over the green and they've said, no, we're taking this down. I'm not having this up here anymore. We're ready to take this down. And look, as you can see, as they've crossed and started to bring it down, we have then got our lovely flat topped candle, a lovely Heikin-Ashi candle here, which corresponds to this stochastic. Now, that is the point where you want to be interested in this trade, to taking it down for a sell, because look, the sellers are in control and they're taking this trade back down to below the 20 line, see? So now they're literally down here under here. So this means that this is setting up now for a buy, because they want, this is like an oscillator, so it goes up and down, up and down, up and down. So here, where the stochastic crossed over and these lines are quite far apart, and you had a flat topped candle, and you've also had the signal on the vibrator that something's going to happen with this pair, that is where you would want to sell. Now, this little ruler tool over here, if you measure from there, and you measure down where that went, okay, at the moment, this is up to where the bottom of that wick is, 16 pips that sell was. Now, we only go for 5 to 10 pips per trade doing the BYOB on the 5 and the 15-minute time frame. So you would have easily got your 5 pips and you could possibly have got your 10 pips on this trade. But before we would take this, we're going to add one more indicator to make sure. This is a 3-step process, this strategy that we're doing. It's all about the candles, the stochastic, and now we're going to add something else called the PSARs. Now you go up to your indicators again, and we're going to add the PSAR, which is the parabolic SAR. There we go, we click on that. And what it's done is see these drop these yellow dots on. So now you've got a stochastic, you've got your Heikin-Ashi candles, and you've got PSARs on here. Now, parabolic SAR stands for parabolic stop and reverse. When the trade is going up for a buy, these parabolic dots stay underneath. Okay, they go up with the trade, they stay underneath, they're nice and comfortable under there. But if these PSARs stop and reverse and go on top of the candles, that is when that's telling us that there's going to be a trend change in this trade. And that trend change is going to now bring this down. So that's another confirmation that this was going to come down. Now, for our BYOB strategy, you check the news. Okay, very simple. You know how to do that now. You go into forexfactory.com and you make sure there's nothing going to be going on. Okay, but this is probably news based because we did have that red flag USD news. Okay, so at this stage, we probably wouldn't have taken this because that would have been kind of like gambling, because we wouldn't have known what the news effects was going to have on this. Luckily, it went down, but we wouldn't have known too much. Okay, so you would be careful with this one. So the news, we check the news. Okay, we then look at our stochastic. Was the stochastic in the extreme? So we're just going to use this point as a reference. Was it in the extreme at this point?
Yes.
Yes, it was. It was in the extreme, and the sellers crossed over. So this was a brilliant sign that something was going to happen with this trade. The next thing is, did we have a flat topped candle? Yes, we did. Look, we had a lovely topped candle, and the PSARs had flipped. So PSAR, candle, stochastic, all three lined up. Lovely. That is when we would get into the trade. We wouldn't get into it here, even though we had a stochastic and a SAR flip, because the candle wasn't right. Okay, we wouldn't get into it there. We would get into it here when the candle was right, the PSAR flipped, and the stochastic had been in the extreme. If it started to move out of the extreme, it's fine. As long as it's got room to come back down again, you can get into this trade when the stochastic has started to move down. As long as it's been in the extreme just before, it's still valid. Now, what you would do is you would wait. Now, this candle would start to form, but there's no reason why this candle, halfway through its formation, couldn't go turn and wick up again. Okay, so you need to make sure that this candle is definitely going to be a flat topped so that it still meets the criteria. So give it a few minutes at least. If you're on a 5 minute, at least give it a couple of minutes to make sure that's definitely forming the right way. If you're on the 15 minute, at least give it 5 minutes to make sure it's forming. And some people, and I used to do this a lot as well, even wait for the next candle. So if you've had one flat topped, it's definitely flat topped, then I sometimes would wait for this next candle to form just to guarantee that these candles are nice and strong. Because if you're only going for 5 to 10 pips, you want to make sure that this is going to come down. You want to make sure that everything's lined up. So you've still got your SAR flip, you still had your flat top, and you still got your SARs on the way down. This would still be a good trade to jump in on the second candle there. Now, as I've mentioned before, we go for 5 to 10 pips per trade. So wherever you're happy with profit, just lock it in. You know, that's the key to this. Is like, you know, don't sort of think to yourself, well, I'm definitely going to get to 10, and say you're hovering around 7 pips profit and it looks a little bit like it might not get there. Just close it. Just take 7. Just be happy with 7, okay? You don't have to push it to 10, because I guarantee you will get to 9.5 pips and it will turn and take you out, all right? So as soon as you're happy with your profit, lock it in. If you're locking in 5, if you're locking in 3, if you're locking in 7, there's always going to be another trade. So always make sure that you're locking in your profit. Now, another thing we need to do is we need to make sure that we are protecting our accounts as well when we trade. So you need to put in what's called a stop loss. Now, a stop loss is a level where if this trade turned against you, you would be prepared to take that loss. Okay, you need to put that. You need to be your own sort of. You need
Sarah,
to make sure that. Yeah.
can I just ask you a quick question?
Yeah.
You know, when you put the stop loss above the PSAR,
Yeah,
sometimes these PSARs are quite high.
they
So,
are.
you know, if it's like a 20, 25 pip stop loss,
Yeah.
do you move it nearer to the candle rather than keep it at 25? Because 25 is quite a lot of pips to lose on a 5 pip possible.
Yeah, it could take out all your profits from the day before, couldn't
Yeah.
it? And that's what's happened to lots of people. And this is why what we say is you need to set your lot size to accommodate for these pips as well, right? So if you're going to get in on this candle here, say we got in here, that would be a 5 pip stop loss on that particular one. Now you need to ask yourself, you need to use your little measuring tool, and you need to say to yourself, right, if I got in here and I was going for 5 pips, would I be happy with a 5 pip stop loss? And if you are, you put it above the PSARs, okay? If you look at this and your PSARs are really, really far away from where you got in, and say it's 25 pip stop loss, maybe that the risk to reward on that maybe is too great for that trade, and maybe you'd want to look at one that wasn't so risky. Or what you would do is you would use your position size calculator, and let's just say you had $1,000 in your account, okay, and you want to go for 3% on your trade. Now let's just say you're going for 10 pips profit, but the stop loss is 30 pips. So if you put 30 pips in there, and let's just go to Euro USD. USD JPY. Oh God, blank. It's right. Let's just use USD JPY. So for you to go to your 3%, you would need to put your lot size at 10, okay? But then that is only going to give you, if you lost on that trade, then that tells you that you would lose $30 on that trade, okay? Because you've put a 30 pip stop loss in, okay? Yeah. But on that one, if you was only going for 10 pips, well, you've got to put that in as a stop loss, haven't you? 30, yeah. So you'd have to calculate that bit as the stop loss, okay? So say it's a 30 pip stop loss, and then you've got to say to yourself, am I prepared, if this goes the wrong way, to lose $30 on that trade? And if you're not, then you need to bring your stop loss down, okay? You need to go to a smaller ratio, or you need to bring your stop loss, your lot size down, so that you don't want to lose any more than $30 on that particular trade.
Gotcha.
So this can also be like, if you're going for 10, you would win for 10 pips, you would win $30, but really you need to look at that. If you put that in as 30, you're gonna, no, that doesn't make sense, does it? Confusing myself now. I thought that was stop loss or pips gained on that. Maybe
no, Sarah, it's your stop loss gain for your risk.
Right, okay. So yeah, if you're going for yeah.
Because if you're going for 30 pips, it's going to calculate your $30 and give you the number of lots for that. But
right.
If you change it to anything else, it's going to recalculate it for your $30. What is that going to be for that amount of pips that you specify for your stop loss? So it's not really your profit calculator. It's really a risk calculator.
Right. That's right. Yeah, it's the risk rather than the reward, as it was. So I mean, I tend not to use, when I'm doing something like the BYOB and I'm just using the 5-15-minute charts, I try not to overcomplicate, and I try to just visually see if I'm happy with the risk that I'm about to take. So say I got into this trade on a horizontal, let's just say I got into this trade on this second candle here, okay? Let's just say that was where I entered this trade. Now I would look at that and say, right, am I prepared to have a stop loss of, say, seven pips? And if I'm happy with that, then I'll put my stop loss there. If I'm not happy with that, then I will move that down to say I'm only going to risk 5 pips, and you would just risk 5 pips, but you're more likely to get stopped out if it's not above the PSARs. So for every trade that you're about to take, I would say just have a little measure from where you're going to get in to how far away your PSARs are. And if you're not comfortable with that amount of risk, then wait for a trade that's a little bit closer to the stop loss, okay? Otherwise, you could, like he said, get 5 pips out of this, and then the next one you take, you could lose 25 pips. And that's where I think where a lot of people are going wrong. They're taking, even though all 3 things are lining up, they're not really looking at how much stop loss, if it hit the stop loss, it's going to be, because a lot of them can be quite deceiving, especially with the Great British Pound pairs. They, you know, this little area here, they don't, that could be 5 pips on this chart, but if you went to another chart and measured that same sort of distance, let's just say, see that same sort of distance on that one's 11 pips. So everything is going to be, you have to remeasure every different currency pair that you go into to make sure that you're happy with the risk that you're about to take. And if you're not happy with it, either really reduce your lot size so that, you know, you're not going to gain as many pips, but you're not going to lose as many if it turns. Okay, so just be aware of how many pips stop loss you're going to put in, but always please put in a stop loss, you know, even if it's an emergency one, well above, because you never know what's going to happen. You could lose internet connection, your MT4 could crash, anything could happen in this world, as we know now. And if you haven't got your stop loss in and everything crashes, then that trade's going to carry on without you, okay? And you've got no buffer. So please make sure you always put your stop loss in and add your take profit. So if you're going for 5, just put your take profit level in. If you're going for 10, take your take profit level in there as well, so that it will close you out and you've got your pips and you're happy. Right. Anyway, this would have been a lovely little trade on the vibrator. Look, this one's really going for it. But I would only get in when it was set up. So I would get in there for a sell. That's 20 pips that's up so far. That's a good one. Right, so they're your 3 indicators, okay? It even shows you on the vibrator when you've set it up as a BYOB. You've got your P-SARs, you've got your stochastic, you've got your candles. So those are your 3 things that you look for on BYOB. Let me just get rid of these drawing tools a minute. So has anybody got any questions on the 3 things that we are looking for on this trade before we took a trade? Do you think you could look at this stochastic and decide whether it's in the extreme for a buy or in the extreme for a sell? Do you understand the fact that the P-SARs are on top for a sell and they stop and reverse to take it the other way? Is that all quite clear? Do you think that that's quite a simple strategy to be able to look for? Would you be happy to have a go at that on the demo account and just get used to looking for those 3 things? If you are, then you can trade Forex, which is amazingly wonderful. Right, okay, so let's go and see if we can find a trade, shall we? Let's go back to the vibrator. I'll just move my gallery there. Come on, vibrator, what's going on here? Please refresh the web page. Okay. It'll kick me off now, isn't it? No, it won't. Here we go. Right, so I'm just going to remove my day, my 4-hour, 1 hour. Right, so that UJ was the last one that was called. Okay, so we haven't had any new ones come in yet. So we can always, but we have to learn patience when we're trading as well. If there's not a trade there, there's not a trade there. Don't go looking for them. Let them come to you. So let's go and have a look at our harmonic scanner, because you can trade the BYOB off the harmonic scanner as well. If there's not one on the vibrator that you want to take. Now, is this going to let me in? Let's have a look. Okay. Now, this is the harmonic scanner, and you get this as part of your platinum package. This comes for free with your platinum package when you join I'm Academy. So it's a really, really good tool. And the $1 Million Traders use this. It scans the markets for patterns within these candles. And these patterns have all got names, different names. They're bats, sharks, butterflies, gartleys, and you'll hear those phrases from the traders. And what it does is it finds these patterns. Now, some people think that trading is kind of random and you're never going to know, but there are specific patterns that form within these candles that we can trade off of that seem to repeat themselves. They're like repeating patterns. And this one it's found here is the Great British Pound Canadian dollar, and it's found a shark pattern in these candles, right? Now, this apparently looks like a shark, but I don't get it myself. I don't see that, but I don't need to see that. You don't need to know what they're looking at, okay? This is completely found this pattern with amazing technology, right? We don't need to worry about that. You can, when you become very advanced and you learn all this stuff, you can, you know, you start to see these patterns yourself and you start to draw them yourself. Now, a shark pattern gives you 2 entry points. Now, this is telling me, because if you look at the D point, that's where the actual price is now, right? Now, this is telling us that if this candle comes up to this green line, it could start to come down for a sell, or if it gets up to this green line, it could come down for a sell. Now, this is a shark pattern. Now, I don't like to trade sharks because they give you 2 entry prices. So unless that's gone up to the second one, I don't like to trade it because it can just keep going on forever. So you can come on here and you can choose a different trader's signals. I like to use Trader's Way, and you click on the top one to see the patterns, right? So this one's come in, New Zealand CAD. Now the entry price is here, and what this pattern is telling us is that when this gets to entry, this should come down. This is your take profit 1, take profit 2, take profit 3. It actually gives you your take profit levels, okay? And it actually gives you a stop loss. So if you didn't want to rely on yourself, you could literally come onto the harmonic scanner and it gives you your entry, your take profit, your stop loss. And you could just trade the scanner. And I think the scanner's got like an 80 odd % win rate on a 15% move, okay? So if this moved from there, 15% down, there's 85% chance that this is going to hit, okay? So let's go and look at this one, shall we? This is the New Zealand CAD. So I would then take it onto my chart and have a look onto BYOB conditions. Okay, right, look at this one, guys. This is a beauty. Right, now that was a 15-minute scan though, wasn't it? Okay, so at the moment on the 15-minute, this is not ready. We were in the extreme, which is a fantastic, but we haven't had a SAR flip and we haven't had a flat topped candle. But if you drop down a 5-minute chart, it's given us the perfect BYOB setup. We have got the stochastic, which was in the extreme. We've had the sellers cross over the buyers, ready to bring it down. The PSAR has stopped and reversed, and we have got a flat topped candle. But remember what I said, this is a 5-minute candle. This candle's got another 4 minutes to go yet. So anything could happen with this candle before it closes. This could wick up, this flat disappear, it could turn around again. So I would always give this a few minutes on a 5-minute candle to make sure that this is going to stay where it's going to stay. Now, the next thing I like to look at is where I think this is going to go. Is there enough room in this trade for me to profit? Now, that's when you start to look at support and resistance levels. Now, as you can see, there is quite a major resistance level here. Can you see how many times these candles have kind of respected this area? So what I would tend to do is draw a horizontal line around this area here, okay? Because it seems to be, if you look left, always look left to see what's happened before. It's really respected this area, and here as well, look. It seems to like this area, which tells me that this particular candle could just come down to this area here and bounce back off it again. So if you use your magic ruler, you measure where price is now, down to that line, there is possibly 7 pips profit there. So this would be just a little 5 pip scalpy trade, okay? So then what we want to do is see how many pips we could possibly lose if this turned and went the other way, and we want to put our stop loss in. So we get our ruler, and let's just say we got in where the price is now. So you need to ask yourself, are you prepared to lose 16 pips with a chance to win 5? Okay, so would you be happy with that kind of ratio? If you are, then that's fantastic. You could take that trade, or what you could do is you could, as this gets into profit by a couple of pips, move your stop loss to break even. And what I mean by that is, let's just say you got into this trade right now, right on that line there, okay? Let's just get rid of this support and resistance so you'll confuse you. Let's just say you got in right here, okay? And what you've done then is you've put your stop loss above your PSARs up here. Okay, so your stop loss is set, so it won't go any further than that if it goes the wrong way. Let me just move this down a little bit so you can see it. I'm going to just shrink this down a little bit because it's a bit wide. Right, okay. So you've entered the trade, okay, and you're going for your 5 pips. So let's put a line in where you're going for. So it was on 2, 7, 2, 2. Oh, it's a bit jumpy. Out there. Okay, that is your measure to make sure from the aqua line where you got into your trade, it's 5 pips to that green line. Okay, So let's just say that you started to go into profit and you were 2 pips up profit on this trade, and you will think to yourself, right, okay, do I want to be in a completely risk-free trade now? Am I happy to just let this run to take profit, or do I want to move my stop loss? And at that point, you can grab your stop loss. You can do this on your MetaTrader 4 app, and you can move your stop loss just in front of where you got into your trade. Okay. So let's just say this candle came down and you were 2 pips in profit, and you've moved your stop loss in front of your entry price. So if this trade now came down, okay, and it literally got to 3 pips profit, and then something happened and it turned the other way before you could take your profit, okay, all it's going to do is hit this stop loss now that is now here, protecting your entry price. Your entry price. So if your entry price is like 1 pip away from your stop loss now, you're gonna win 1 pip. You're risk free because you got in here and you've moved your stop loss underneath. So if this turned the wrong way, you would get out of that trade 1 pip in profit, but you wouldn't have grabbed your 5 pips, but you still got 1 pip and you didn't lose anything. So you can always move your stop loss once you're in profit, okay, to make sure that you're in a risk-free trade. And it's hard to do that when you're just going for 5 to 10 pips, because it's happened so quick. This can literally we can come back up again. But this is something you can do on the bigger time frames, especially on like the 15 minutes and things like that. You can look at those. Okay, so this trade was on the harmonic scanner as a 15-minute. Yeah, New Zealand CAD. But on the 15-minute chart, as we can see, you wouldn't take this as a BYOB trade off the 15-minute, because look how far away the PSR is for a start. So this tells me that just by looking up a time frame, that this trade, it's literally, I think all this is going to do is come down to probably here, and then it's going to carry on up again, because it looks like it's on an uptrend. This is all stuff that you'll just gain from experience, but it looks like it's on an uptrend and it's just doing a little retrace before it carries on up. So I wouldn't be happy taking that trade. And another thing that we look at on the BYOB is, how do you feel about this trade? And the more trades you take and the more times you enter a trade and the more BYOBs that you do, you'll start to get a feel for what things you're looking for. We do use this very simple 3-step criteria, but also for extra ninja confirmations, as they say here, have a look at the overall trend. Are the candles trending up? Have a look at how you feel about this trade. Have a look at, has this trade got enough room for you to benefit out of that trade as well? Don't just take a trade without looking at some of these things, because sometimes this could turn around and bite you in the butt, honestly. So make sure there's plenty of room to get your pips. Make sure that your stop loss is not going to be too far away so it takes you out for the day. You know, you don't want to be getting, you know, having a really good day and getting a couple of 10 pip trades, and then you get into a third trade and then the stop loss is like 40 pips away. And then suddenly that one takes you out and you've just lost your profits minus to another 20 pips. And you can have like, it can absolutely devastate you. Absolutely, it's awful. And that's what we call over trading as well. That's why we try and encourage people to look for the perfect BYOB setup. The one that's going to give you the pips that you want, the one that's not going to have a massive stop loss, the one that all 3 criteria are meeting up, the one where the news isn't going to affect it, the one where, you know, you've got room to breathe in the trade. Grab 10 pips out of that, get your 3% for the day, and then don't go back into the markets. Because the times that I've got my pips in the morning and I thought, oh, I've got a little bit of time, I think I'm going to go back on the charts. And you go back on the charts and it's like sod's law. It would just, you'll take a trade that will go the wrong way and it will knock out your profit from the morning. So now you're at 0 because you've got 10 in the morning, you gave 10 back after that trade, and you think, right, I'll take another one. And then you go back in, you take another one. If that one loses, then you think, right, I need to get that back. So you take another one. And you can get yourself into such a rut where you're chasing your losses. And, you know, so just go for 5 or 10 pips, lock in your profit. And when you've got your target for the day, I know this is the most hardest thing you need to do, but you need to stop trading. You've done it, okay? You don't need to take any more trades. And if you've got that itch where you need to scratch it and you need to take another trade, then practice on demo, okay? To get that, you know, just keep your hand in it. If you want to keep going, keep practicing on demo. But on your live account, once you get your target for the day, just stop and say, right, tick, done it. Thank you very much. I've got my target, I've done it. Don't give it back to the market in the next trade that you take, because that's where a lot of traders fall down.
Sarah, I've got a question for you.
Yeah.
what do you do if, I mean, obviously you're trying to get your 10 pips at 3%, or you can get you can get 5 pips at 3%.
Yeah.
That's what I've been doing recently, because it means less trading, and you can walk away with your day's profit with just 5 pips.
Yeah.
But what do you do if your first trade just loses?
If your first trade loses, then I tend to go back in and look for another one. But if I've won my pips, then that's it, I'm done. But if I haven't got any pips for that day yet, then I will go back in and have another look, because I haven't sort of lost my pips. I've just I didn't have any to start with, so I would just go. I would just if I lost it on my first trade, I'd be like, right, okay. And then what you need to do is analyze why you think you lost that trade. So go back in and have a good look and think to yourself, right, what was I missing? What didn't I spot? What was it that what didn't work about that trade? Was it that the trend wasn't right? Was there a news story? Was something announced on the news that wasn't in Forex Factory? Was the stochastic really in the extreme? And have a look back and just try to learn from the trade that lost and figure out why it lost. And then from that, you've learned a lesson. But then, yes, I would go and have another look at another trade, but I'd obviously be I'd be cross because I'd lost the first one. But yes, I would go back in.
I know this is hypothetical, but this has happened to me a couple of times. If you've lost the first trade, let's say you've lost 5 pips, right? Then you have another trade and you break even.
Mm-hmm.
Now what do you do?
I'd walk away.
You would, yeah.
Yeah, no, I just wouldn't. I'd think to myself, something's going wrong today. Something's not working for me today, so I'll just walk away. I know that's really hard to do, but sometimes if things aren't working out that day with your trading, sometimes it's like you're just not your day. Do you know what I mean? So I would just go, right, let's go back tomorrow and have another look. You really have to be that disciplined and just say, well, something's not right in the markets today, or it's a bit. We always talk about, the markets are volatile today, or they're really slow moving, and if you've had a couple of bad experiences already, sometimes I just think, maybe today's not my day. So I would just tend to go, right, I'll come back tomorrow. The market's going to be there tomorrow. I'll have another look tomorrow. Because otherwise you can get yourself really sort of stuck in a rut, and you can start revenge trading, and you can start desperate trading and looking for trades that aren't really there just because you want to get another trade. So if you've had a couple of bad experiences in one day, I tend to just go, go and put the kettle on. Let's just leave it for today, and go and do some stuff on demo or go and do some training or something like that. So that's what I tend to do.
It's just having discipline, isn't it, really?
It is, and that's the hardest thing. The trading side of things, anybody could do this bit. Anybody could see whether that was in the extreme, whether that was a flat top or whether that was a P-star flip. And anybody could go and look at the news. That is, I'd say, only about 5% skill when it comes to trading. The rest of it is all how you approach a trade, how you feel about a trade, how greedy you can be, how you can revenge trade. And it stirs up so many different emotions for you when you're trading, and it brings out personality traits that you probably didn't even know you had. You probably didn't know you was greedy. You probably didn't know that you was a desperate revenge trader. You didn't know that you was addicted to the markets. You sort of sitting there and go, I need to trade. What's going on? I haven't got my 5 pips.
I think most people have got a greedy side, though, don't you?
God, it's human nature. Do you know what I mean? Yeah. It really does. It really does come to light when you start to do something like this, because when and the other thing is when you've had a really good day. Sometimes you think, I'm unstoppable today. I'm absolutely unstoppable. I can take any trade and I will not lose today. I've had such a brilliant day. And you could take a trade because you've got all cocksure of yourself, and that one could take out your profits for the whole day. And you feel about this big because you think to yourself, I was not, who do I think I am? Thinking that, I'm above the markets. I'm not. These markets are like a living thing. They can turn and bite you in the arse any time of day. So you need to be protecting your money, protecting your accounts, having stop losses, locking in profits as soon as you can. Don't be, because what I used to do is I used to go for a lot more pips than I did before I found the BYOB. I used to go for a lot more pips, and I'd be going for like 20 pips, 30 pips, and I'd get to like 24 pips, and I'd be like, right, okay, here we go. We're going to get to 30. We're going to get to 30, and it would get to 27, 28, and I'd be like, right, I'm hanging on in there, and I was really happy with 28. That was brilliant. And then it would just turn, and I'd be like, no, why didn't I just take the 28? And it just, you kind of just want to, as human nature, you want to level it up. You want to go, right, I want to make it exactly 50, or I want to make exactly 55, and I'm going to push it and I'm going to wait. But to be honest with you, just lock it in. or close most of your position. So say you went in with a 0.10 lot size and you got so close to your target, I would literally close out 0.9, lock that in and just leave that little 0.01 running to get to your target if you want to, because that way you've satisfied your curiosity that it was going to get to your target, but you've locked in your
Right,
profit.
that's something I didn't know. I didn't know you could actually alter the lot size whilst
Yes.
the trade was actually in progress.
You really can. Right, let me just
Yeah. I know you could alter the take profit and the stop loss.
Oh yeah, this is a brilliant thing. Right, let me just
Yeah.
go onto my demo account. Oh, I wish that wasn't my demo account. It's on like 500 pips, $500. Oh, it's just taking me out. Oh my God. Right, okay, no, that's taking me out with profit. That's good. Okay, so today on my demo, I've made £887, which is quite
nice. Nice. Do that every day, you'll be all right.
Yeah, so I've been just, yeah, because I've got the kids around. I haven't really got the time to sit there and really focus on what I'm doing. So I would sit there on my phone and I'll just do it off my phone, and that's, you know, that's good. Right. So I better just take a trade so I can show you how to close that profit. So let me just look at something on here. All right, bear with me a second. See what trade we can take. All right. So let's look at that one. Here. I wish I could plug my phone in and show you that way. That would be a lot easier, wouldn't it?
There is an app you can do that. I'm not sure what it is though.
Oh my God, have you seen what's happened to Euro? Hang on a minute, let me just share screen. This has gone a bit mental. Euro JPY has just gone nuts. All right, let's have a look. Where has it gone? Euro JPY. Probably doesn't look as nuts on here. It looks nuts on my phone. Euro JPY on the hour. Yeah, look, this is an hour. Look at that spike. Look at that. That's what I mean about it. It could take you out. If you had your stop loss on your PSAR, look, straight up. Right, something's happened with the Euro JPY because it's just gone absolutely mental, right? So what's happened is this is shot up here, which was, I told you Euro today, don't mess with the Euro. This is what I mean by how the news can affect things, right? That spike was 60 pips and it's just a wick, right? So this is when I say, you know, if there's a lot of news, then don't risk it because that would take you out. So let me just say I was going to trade. Right, I'd probably do a sell on that because it's just a wick. All right, so trade. I'm going to wait for this to be in profit. I wish it was that easy, wouldn't I? Right, stop share. Speak of you. Right, can you just see me? Or you can see everyone else. Right, okay. Oh my God, it's gone in. This is demo for anybody that's going to have a go at me, right? So $200 odd, right, in drawdown at the moment. It's now 400. That's how quick, right? When you're on big lot sizes, this is how quick this can happen, right? So let me just go to, I don't know how to do it, speak of you. I don't know how to look at myself so I can see where I'm showing or not. Right, anyway. Right, so this one is now 700, right, in drawdown. This is not what you want to do, right? So if you wanted to close some of that out, if you hold your finger, oh God, how can I show you this? This is really hard. If you hold your finger on the actual trade itself and you hold it down, right, these options pop up. If you hold your finger on those trades, these options pop up. Let me just see. I don't know what I'm showing you because I can't see myself.
Yeah, we can see that.
You can see that, right?
Yeah.
You go to close, right? And this little bit pops up here, right? So what you would do is, see at the top where you've got your lot size in there, if you just take away a little bit of that lot size, so it was 308, it's now 307, okay? And you press close, that is just going to close that position, that point, that part of that lot size, and it's left that little bit running. That tiny little 0.01 running, okay, but it's closed the rest of it. So if you imagine you was in profit, you press close and you close, I'd say 90% of your trade, lock it in. That's locked in. That's yours. That's yours. That's safe, right? That's yours. Then you just leave that little bit running. And it's not risk free because I haven't moved any stop losses. But no, that's gonna it's gonna go into make a profit in it. But yeah, that's how you close out literally. This is MetaTrader 4, Paul is asking in the chat what app it was. This is just your MetaTrader 4 app on your phone.
We don't use our phone.
Don't you? See, I only trade off my phone. That's weird because I know that Paul Turner trades off of his desktop, and I know lots of people trade off their desktop, but I only do it off my phone. Because I'm never seen one place for still long enough, so I'm just kind of always off my phone. But yeah, you can do that on the actual app as well on the computer. So literally, whatever trade you're in, hold your finger on it, and these options pop up, and you press close, and then you just change the position, you change the lot size, and you close out some of your position. Okay, that's how you do that, and that's how you move your stop loss as well. If you hold your finger on that button and do modify, then that gives you the option to go in there and change your take profit, your stop levels, and all that sort of thing as well, and press modify. So that's how you can literally go in and manipulate your trades and change them and put your stop losses, move your stop losses, and all that kind of fun stuff that you can do. So yeah, that's how you do it on there. Oh no, I can't believe it. Well, I was $800 up on my demo this morning, and now I'm $400 up, you know, so it sucks. I could live with that though. Honestly, I could live with that. $400 a day, not too bad at all. So yeah, that's what happens when you get to bigger lot sizes. But it does get scary when you're on bigger lot sizes and you are literally trading for 5 pips, because that amount of money it happens very, very fast. So just be very careful. Right, let me just go through some of the chat. Yes, I do need a better password manager. It's rubbish, isn't it? FX book calculates position size. Yep, and the app, yeah, the app is MetaTrader 4, Paul. That's all that one is. Okay, so oh no, what have I done? Oh, I've lost all my Zoom. There you are. Okay, so it's coming up to 4 o'clock now. Was there any questions before I jump off? Anybody got any questions? What's the day? Thursday. Oh, 4 p.m. today. We've got David Kahn and Sarah Hill coming up. So you jump over and watch those. We've got Les Gallagher at 7 p.m. tonight, which is excellent. We've got the Baby Boomer Power Hour at 2 a.m. UK time, but therefore the Australian, the Canadian, and the markets there. So there's still another 3 live trading sessions to come. This was very much a beginner's guide to BYOB, so you can see just how simple the BYOB can be. It literally is finding those 3 things, making sure they all line up. Be careful of the news, as we've seen from that Euro JPY one today, how quick that can kind of shoot up if you're trading around the news areas. So yes, just trade with caution. Make sure that you're putting in stop losses that you're happy with. That's the thing. It's your trade in your account. If you're happy with that stop loss, then you put the stop loss there. If you're not happy with the stop loss size, then move it to the size that you're happy with, and either take that risk of it stopping out or not stopping out. But try to put it where, you know, where there's a resistance or a support or resistance, or just above that if you can. And if it's too far away, then maybe that trade's not right for you. Okay, so just you know, it's your account, it's your trade, it's your balances at the end of the day. Just protect your accounts, lock in profit wherever you can. Don't get greedy by, you know, pushing it to the limit. You know, if you're in profit and you're enjoying that profit, then lock in 90% of your profit and just let the last little bit run. Or use one of the tools in Ninja Team, like the exit manager, which manages the trade for you. So all that stuff I was doing on my phone, when you modify and you move stop losses and close out profits, then literally, you know, you use the exit manager and it does it for you. But you need a good internet connection, which I haven't got, which is why I don't use it. Because if your internet runs down and your exit manager's running your trade for you, it might not work. So just be careful of that as well. Get one of them VPN things, or whatever they're called. What are they called? I never remember what it is. VPLs or something. Virtual VPNs. Yeah, don't get a visible panty line, get a VPN, and then you'll be fine. And you can just trade and you can run exit managers and all that sort of stuff. So hope that was helpful. Thank you so much, everybody. Sorry I wasn't on yesterday. The kids were absolutely hell yesterday, and I couldn't control them, and there's no way I could have got away into the office to do any trading yesterday. So, but the duct tape seems to have worked because they've been silent, which is excellent. So I better go and release them from their pen. And I'll see you next week. Happy trading and have a lovely weekend, everybody. See you soon. Bye-bye.
Cheers.